Hello everyone, welcome back to Just Invest Today. And in today's video, we're talking about the Q1 Alibaba earnings. We're gonna break it down to you in this video. Man, is this a sell? Should people sell the stock? Should people buy the stock? What are you doing? You can hear everyone talking about this was a very bad quarter and that maybe you should sell your stock. So what should I do? Should I sell all my stock? Should I buy more? Should I just wait? We're gonna get into it in this video, but before we do, guys, please like this video, subscribe to my channel. I'm always providing you guys with so much new content, so like it and subscribe. So let's get into these earnings results because, man, this is a mixed bag. I have two scenarios for you guys. If you are a short-term investor in Alibaba, you don't plan to hold this for 5 to 10 years, you're not gonna like the stocks through its ups and downs, you need to sell it out right now. I'm just gonna be honest. You just need to sell it because Alibaba is gonna go through its ups and downs. It's not gonna be a perfect ride, as you've already seen. Alibaba China is dealing with max pessimism. Who knows how long that's gonna last? Like, no one really knows. So if you're in it for the short term, you expect this to recover in maybe a year or two. It might do it, it might not, but you cannot expect that. Sometimes it might take 5 years, 6 years, 7 years. If you're not gonna be a long-term owner of Alibaba, you need to sell out because you're just wasting your time, honestly, in my opinion. But if you are a long-term holder for Alibaba, there is so much to love with this earnings report. There's so much positive. There is negative, but there's a lot of positive as well if you're looking at it through a lens of, I'm holding the stock for 5 to 10 years out. If you're looking through it with that type of eyes, this is a good stock to own. So let's get into it. But before we do, we gotta look at the overall picture of Alibaba. I love this tweet. Alibaba's ecosystem. They have 1.3 billion annual active customers. Can someone name another network like this in China in the world? It's almost impossible. Just looking at their overall picture, you can see why this company is so valuable. Even though the market is not giving you that value, this company is irreplaceable. And that's why I have so much faith in the 5 to 10 year price target of Alibaba. This company isn't going anywhere. They're just going to get bigger and bigger and bigger as internationally they grow, as cloud grows, as the GDP, as China gets bigger, as more people get into the middle class. They're going to automatically go to Alibaba because it's just the biggest infrastructure in China. So the network effects of just Alibaba and the prices it can charge and the things that they can do with their network is just, it's almost impossible to implement somewhere else. So that's where I'm gonna start off and saying I can hold the stock 5 to 10 years out and sleep well, knowing that the network effects of Alibaba is just irreplaceable and the moat is gonna be there. It's not gonna go away. So I don't care what these short-term results say right now, but man, in the long run, it's gonna succeed in my opinion. So let's get into the results of the quarter. Year-on-year revenue declined by 1%. And guys, this is actually a win when you think about what happened in China during this time in May and April. Cloud grew by 10%. And that is also a win. I know people were saying, oh my God, cloud didn't grow by a lot. But you have to look at the whole macro sphere of China and what they're dealing with. So we're going to get into that. But remember this, cloud grew by 10%, revenue declined by 1%, which is a win for me, especially in this quarter. The macro does matter. Income from operations down 19%. So this is honestly a win and a big loss too. So the income from operations did decline 19%. But when you really look at it, their actual expenses didn't go up by a lot. So that was the win, even though the revenue generation wasn't high, which is the big loss for the quarter, which kind of contributed to their income from operations being down for the year. So net income was actually down by 30% as well, and decrease in share results of the equity method investees. So a lot of their equity investments, their long-term investments went down. So when you're looking at that as well, you can kind of see that the macro sphere is contributing to those profits, that income from their investing portfolio going down. So that had no contribution to their bottom line and net income this year. So you can kind of see why they're down so much on their bottom line of 30%. Overall, this is in millions, 205,740 down to 205,555. So that's what happened with revenue. Income from operations, 30,847 down to 24,943, down 19%. Net income down 42,835 down to 20,298. A lot of the net income has to do with the equity investment. So that's it for there. Plus, free cash flow was $3.3 billion, so it was up 7%, which is a huge positive. We're seeing cash flow generation even in this bad times. That was really positive for the free cash flow side of things. So you're gonna ask, why did the revenue decrease 1% year over year for this quarter? Well, look at this. According to the data released by the National Bureau of Statistics, China's GDP grew by 0.4% in the last quarter, lowest since the outbreak of the pandemic. Retail sales decreased year over year in April and May due to the resurgence of COVID-19 in Shanghai and other major cities, and has slowly recovered in June. So there you have it. It's a macroeconomic situation. May, April, zero COVID policy. So how do you expect Alibaba to grow in that type of environment? It's almost impossible. How do you expect Alibaba to grow in that type of environment when their company, 80% of the revenue is generated through e-commerce sales? So if the GDP isn't growing, remember, Alibaba is the biggest e-commerce company right now. So if the GDP isn't growing and people are not buying, how do you expect Alibaba to succeed in that type of environment when people are not spending and people are not buying anything? So think about it. If the economy does bad or the economy is not growing, Alibaba isn't going to grow. And that's just a fact. Alibaba is going to be the marker of the growth of China. So if you're seeing China slowing down or not growing because of what's happening down there, Alibaba isn't going to grow that fast. And that's just a fact, man. So as long as the Chinese market grows, which is saying that Alibaba is going to grow with the Chinese market, then you're going to see Alibaba succeeding. So it's impossible for Alibaba to grow when no one's buying anything in retail. This has to show you that a decrease of only 1% when April and May was just stagnant or there's barely zero growth, like that's a huge plus. Because what happens when China gets back on that 4%, that 6% GDP growth of like retail sales, and maybe even higher into the future? What happens when that goes again? That sparks new interest. What happens when that kind of reheats again? Alibaba is going to go crazy. So that's very positive if you're looking 4 or 5 years down into the future. But if you're not looking for that, I can see why these results upsetted you or you had bad feelings about this quarter. Moving on to cloud, I heard a lot of people disappointed in their cloud results of just 10%. CNL was up 5% and cloud up 10%. But I'm going to preface this by saying the macro was hard again. And we're going to go into why. And we're going to hear what the CEO, what Alibaba had to say about this. Despite the near-term sales fluctuations, we will continue to focus on building the cross-border logistic network from China to Europe and the local logistic network in Southeast Asia. We believe if the establishment of these infrastructure will bring long-term value. Our cloud revenues delivered 10% growth year over year during the quarter. The slowdown of revenue growth was a result of multiple factors, including slowing macroeconomic activities, declining in revenue from top internet customer, TikTok, softening demand from China internet customers, and delay in parts of our hybrid cloud projects due to the impact of COVID resilience. So guys, do you believe in what they're saying here? I believe it. I don't think this is kind of out the norm. Companies in China right now are not trying to switch over to cloud as fast because of the macroeconomic environment and the tech crackdown. So I think this is going to take more time to develop in this slowing economy right now. But this slowing economy is not going to persist forever. 2, 3, 4 years down the road, is it still going to be this slow? I highly doubt it. And the demand for internet and going to cloud is just not there right now. So I do believe that there is a delay in people going to cloud in the Chinese market. I feel like that's going to pick up into the future. So I can kind of see cloud going back to 15-20% once demand picks up. If you don't believe in that, maybe you're saying that Tencent or Huawei is taking their lunch, or all these other cloud businesses are taking their lunch, but you can see it with Tencent, you can see it with Huawei, you can see it with a lot of these companies. They're not growing as fast. Their cloud businesses are not growing as fast. So it's not just an Alibaba thing, in my opinion. Now I'm going to go over all the positive things that Alibaba said about the company's future and why I'm so bullish on the company. We already achieved a target of 1 billion annual active consumers in China during the last fiscal year. Going forward, we will focus on growing our wallet share in different consumer segments instead of pursuing further absolute increase in our user base in China. Now they're going to demand more money per annual active consumer, which is huge because they already reached their peak of users, and maybe that user growth can continue, but man, they're going to start actually hammering down on generating more revenue per consumer because they were just always marketing just to get more people to get into the Alibaba ecosystem. So now that they got as many people as they can, they're going to focus on their operations and generating more income per consumer, which is amazing, and I love that. In a highly uncertain market environment, we will focus on serving the consumer groups with higher spending power while providing a matrix of consumer offerings with diversified value propositions for different user segments such as Taobao, Deals, Idlefish, and Freshippo. This is amazing because their value proposition is just none other. Like, no one can compare. So that's why once you're trapped in that ecosystem, that network, it's hard to leave it. It's hard to find other places where you can get the same amount of value because they can just offer everything. We will also take advantage of our quality of operations in China commerce. Our current scale is much bigger than our peers, and more importantly, our advantage in profitability is even larger. This is how they're going to get ahead. They're going to demand profitability from their consumers, and they're going to start demanding that soon. Therefore, we will make the best use of our capital reserves by increasing and building consumer mindshare, user experience, and core capability in key areas such as logistics, after-sales services, and execute on these as our long-term strategy. I didn't even mention them buying back shares. They still have, $12 billion to purchase shares with? And I think they're going to increase that going forward. And they still have $50 billion in cash. So they have a phenomenal balance sheet, willing to buy back shares and just continue to decrease that share count, especially at these prices, which is amazing. That's why I'm not even worried. They're going to continue buying back these shares at these ridiculous prices. Let the share price go lower. They're just going to be able to buy more shares. Thank you. Give me all those shares. We generate the US $3.3 billion in free cash flow and currently has about $50 billion in net cash position. I just outlined that, which gives us the financial flexibility to grow the business and improve returns for shareholders. And I'm really looking for that. Them hampering down on just improving returns for the shareholders by buying back stock and just delivering a lot of value to its customers, and that's how I'm seeing Alibaba moving forward. So, what do you think about this whole earnings call this quarter? What are your thoughts? Do you agree with me? Do you disagree? What are your viewpoints on Alibaba moving forward? Like and subscribe. Peace.